It's John, and today I'm going to cover valuations, specifically on Virgin Galactic. Now, before I get started in the video, I'll tell you now that all the figures are forecasted, estimated, and super arbitrary, but this gives you general ballpark of how you can look at a company and expect where valuations can go if things go as planned, especially in growth stocks like this one. Virgin Galactic shares jumped Monday after the space travel company drew buy-equivalent ratings from two major investment firms. Analyst Charles Minervino initiated coverage of Virgin Galactic with a positive rating and $20 share price target. So where exactly do these numbers come from, and how can we come up with our own figures and determine our own numbers based on our own research to come up with figures that make sense to us? They can be more conservative, or you can give your valuations less margin of error, basically overvaluing them. But general rule of thumb is keeping it super conservative. It does give you some margin of error if the companies don't execute how they said they would. Zeroing in on price targets, how analysts set them. Again, entirely arbitrary numbers. If we go down to this paragraph, understanding how to use price targets involves understanding how the numbers get crunched. Analysts employ a multiplicity of valuation methods, but most common is the PEG method, which refers to a company's price earnings multiple to its rates of earnings growth. Using a 1-to-1 ratio between a stock's PE multiple and its growth rate, a stock with earnings growth of 25% should have a forward PE of 25. So knowing that information, let's use this same concept with Virgin Galactic stock for its 2023 expected earnings and revenues. So first, let's start with their numbers expected in 2023, which is going to be around 1,500 passengers. Okay, so here I have a very easy to read spreadsheet. So I have the 1,500 passengers and the $250,000 ticket price. So if I were to get these two numbers and multiply them together, you would have what we can expect in revenues at that time. Virgin Galactic's looking to get 70% gross margins, and after you take out interest, taxes, and other operating expenses, they're expecting around a 49% net profit margin. So we'll get our projected revenues times our 49% in profit margins, so this would be a 0.49. We are left with $183,750,000 in profits. Now, to figure out the earnings per share, we have to figure out how many shares outstanding there are. You go into Yahoo Finance and you type in your ticker, in this case SPCE. You then go into statistics, and you will see, if you scroll down under share statistics, the shares outstanding right here, the third line. And you can see we have 210.4 million shares outstanding. So if we get our total profits and divide them by our total shares outstanding, we will see an earnings per share of 87 cents for 2023, which I'll put here just to make sure you guys know that this is just for 1 year of operation. According to the last article, our PE should be around the percent rate that we expect the industry to grow. So based on these three articles that I have pulled up with CNBC, Market US, and Market Watch, I'm just going to average out the numbers that they expect. Here we have a $3 billion market by 2030. We have around a 14% annual growth rate through Market.us. And we have around a 16.3% growth rate by MarketWatch. And this is their projection from 2021 to 2026, so there's really no knowing how much the market can expand in this time frame, but these are the figures we have now. So I'm just going to be very conservative and go with around a 15% annual growth rate. And knowing this growth rate, we're going to use that as our multiple for the earnings per share. So based on these figures, you know our PEs are going to be based around 15 or so. So if we get these two things and multiply our earnings per share times our earnings multiple of 15, we have a estimated stock price of around $13.10 in 2023. Now again, these numbers are in no way set in stone. Every analyst can nitpick certain pieces of information and come up with their own numbers. But for a speculative industry, it's really smart to have very conservative projections. So that way, if something does fall through as far as their promises go, you have some kind of room to be wrong and reassess your valuation metrics. So I also stumbled upon something very interesting as far as the old numbers that I had with the $350,000 ticket price. I found that if I put those numbers here instead, so if I were to put this to around $350,000 instead, it puts us a lot closer to the price of what the stock is right now, today, in 2020. So that goes to show you that while a company could be really exciting and fruitful in the future, the stock market can price in its valuation very early before there's ever any real product or service out. And in these terms, with a stock like this one, 30 to 50% swings is totally possible. So I hope with the information you've gotten in this video, you can apply it to stocks you already own. Companies like Virgin Galactic and other growth companies that are very popular and relevant now. Workhorse, Diamond Peak, soon to be Lordstown, Open Door, Nano Dimensions, and Tesla, with the difference being they've already proven themselves over and over again. But this is just to name a few. But with all of this being said, the best investments that you're going to come across are the ones that have not established themselves yet and have room for insane amounts of growth in the future. At the same time, this makes these entirely speculative until they do so, and ultimately you can plan your risk and reward based on your portfolio goals. If you learned anything useful in this video, it's entirely free. Please hit that like button, hit that subscribe button. You'll get notified when I make videos just like this one to help you become a better investor. So thanks for watching again, and I'll see you in the next video.